So I wanted to do a video on basically how negative catalysts can facilitate these fades that you see in small caps. Um, and negative catalysts are often, like we saw today, offering like with SONN, warrant inducement, which is another form of an offering. It can also be delisting, um, reverse split announcement. Those are also kind of negative catalysts that you'll often see these kind of fades before they occur. Um, and I think there's a common misconception in small caps that dilution is often responsible for these fades you see. I would say that's actually rarely the case. I'll show some examples of when it is the case. But typically, what it is it's big players shorting the stock ahead of a catalyst like the ones I mentioned. So, like in the case of SONN, it's true that there were some warrants that were in play, but as I go into another video, even warrants that are in the money, oftentimes the holder's not exercising them. They're just shorting and kind of using them as a hedge or protection. But they're basically just loading up short ahead of the offering and then covering afterwards. Oftentimes it's the people themselves that are actually participating in the offering, which in pretty much most cases it's illegal, but they do it anyways. But anyways, in terms of anticipating catalysts, I'll go through some examples of how you can anticipate that. So one like SONN, which it's actually pretty obvious. It's not too hard to see. And then I'll go through some examples where you don't necessarily have to do digging, but I'll kind of show you where to look for that. Like with SONN, they have an S1A here, so I think everybody realized that they were trying to do an offering. You can see multiple amendments too. But also if you look in their 10Q, which we summarize in the highlights here, this is coming directly from the 10Q. You can also just go look in the liquidity and capital resources section of the 10Q. Oftentimes they'll say, like in this case, their cash is expected to fund operations in November 2024. They don't always do this, but when they do, it's a really good clue of how imminent a catalyst might be when they give this kind of time frame here. So this can give you conviction that something is happening imminently. Also the other thing too is with the negative catalyst, not only does it result in these big players shorting heavily and putting downward pressure on the stock, but longs also don't want to be buying this or holding this, which also can make it easier for it to fade off. Another example is SGBX. In this case, this is a warrant inducement deal. So with this one, goes in the 10Q. So we see here, so this is a summary of the 10Q. We highlight things like upcoming dates or timelines because those are often the things that we're looking for. They got this extension to regain compliance with the NASDAQ listing rule through November 12th. So looking further in the 10Q, that's the stockholders' equity rule, which basically requires them to have a certain amount of stockholders' equity. And the way to achieve that is either through raising cash or by reducing their debt. So in this case, we see that they have warrants. We see that they have this timeline. So you can anticipate that they might want to do a warrant inducement deal, which I mentioned in general chat earlier today. Because we were having a discussion about, dilution, but the fact of the matter is anything that's going to put pressure on the stock, it's not dilution, it's somebody shorting ahead of this warrant inducement deal, which you still need to know about the dilution because it's the warrant holders that are often the ones who are doing it. Because, in this case, the warrant holders have warrants at 265. And what the inducement deal is, it's basically because oftentimes the warrant holders are not going to, I go into another video on this, but the warrant holders, even if the warrants are in the money, they're usually not exercising them ever. They're always shorting the stock and just covering lower. But in this case, what the company does to incentivize them to exercise is they say, hey, those warrants that are 265, we will reduce them to 85 cents. So the company gets cash and the warrant holder gets the profit. And meanwhile, they're shorting it. And then depending on how much they shorted, they'll cover some on the open market or use the exercised warrants to cover out their position. Another one was ZVSA. So this is another one where they kind of telegraph what their financial situation is in the 10Q. So in this case, they had 100K in cash, which is only sufficient to fund operations on a month-to-month basis. So they also did a warrant inducement deal, and this also just faded. And then obviously when they announce it, you get this big sell-off here. But this is just all shorting here. So it's not actual. So what I'm saying is that there's no dilution technically occurring because there's no shares being added to the float. They're just shorting the stock, and then the dilution occurs after the deal is done and they're actually covering up their position. So once the warrants are issued and the warrants are exercised, then they're added to the float, but they're not actually being diluted. They're not actually diluting the stock here. Another example, I'll just show this one. I'll actually show you where to look. So you're going to want to go into the 10Q here, and it's going to be in the going concern or liquidity and capital resources section. So you can also search the keyword sufficient because they're often saying basically saying are like this phrase here. The company believes its existing capital resources will be sufficient to support its operating plan through October 31st. So this stock had made its move on, I don't know, a couple days ago, but this was another situation where they had warrants and they ended up doing a warrant inducement deal. So again, this is just shorting action, heavy shorting, and then they announce the deal, and then the holders are covering, either on the open market or with the warrants that they exercised. Now, in terms of when there's actual dilution, one example was TWG. So in this case, what happened was, I actually did a video on this one. They did an offering of it was back here. They did an offering of 27 million shares at 40 cents, even though it was at $4, and they trapped and then held it up and propped it, and then they dumped this day. Now this is actual dilution. This is shares are being unloaded into the float here. Another one is HOLO and MLGO have kind of like the same deal. And oftentimes you see this occur over a longer time frame too, with this real actual massive dilution. This is them just unloading shares into the float here. But anyways, that's pretty much it. Just wanted to just go over that topic.